reality check for the food delivery business. We'll dig into Square's efforts to sell a business it bought 2 years ago called Caviar and why it's been hard to find a buyer. But first to our lead. Samsung is ending production of its Galaxy Note 7 smartphones after reports that replacement phones had the same overheating battery problems as the original devices that were recalled. Samsung shares closed down more than 8% on Tuesday, wiping out $17 billion in market value. That's the company's worst session since 2008. Analysts are trying to understand what this cost Samsung financially. A report from Credit Suisse said halting the Note 7 could translate into as much as $17 billion in lost sales. So can Samsung absorb this hit? And what does the Note 7 crisis tell us about the limits of smartphone design? Joining me now are Bloomberg Intelligence analyst John Butler and IHS market director and principal analyst for Samsung for smartphone electronics, Wayne Lam. Greylock partner John Lilly is also with me here as well as a guest host for the hour. John, great to have you.
Thanks for having me.
Wayne, I want to start with you because you tear down many smartphones. You've teared down the Note 7 smartphones, and I'm curious, was there anything in there that you could even begin to speculate on why this happened, about the battery perhaps in particular?
Yeah. Hi, Emily. Yes, we've gone through many of the iterations of the Samsung Note series, and the Note series is really interesting because it's a new category that Samsung introduced many years ago that focuses on larger devices, larger screens, and more capability. So what we found in the iterations of the Note 3, Note 4, Note 5, they skipped to 6, so Note 7, is that we've seen this evolution towards higher and higher energy density within the battery pack. So the changes from the 7 to the 7 from this 5 is actually almost a 22% increase in density. That's just pure energy stuffed into a smaller area and volume. And what Samsung's doing here is actually quite astounding. They're competing against two diametrically opposed consumer needs: bigger phone, but more portability. So what happens? Everything gets squeezed, and you have this evolution of the Note series, and now they've gotten to a point where they are hitting some of these pain points in design. They can be overcome, but we still don't know today what the root cause of these battery failures are. But it is very alarming, and obviously a safety concern. But you can't knock Samsung for not innovating in this space.
Right. Samsung initially said they believed it was because of a battery issue that only applied to the original phones, but then the replacements had the same issue as well. John Butler, talk to us a little bit about how important Samsung's smartphones are to the overall business. This is a huge company, and how devastating a potential hit from this particular issue could be financially.
Well, I think what's really hard on Samsung here is the fact that this is their flagship phone. The Note is, without a doubt, the phone you see most often in their advertising. The Galaxy S7 and the S7 Edge probably come in a close second. But it really hurts to have to recall the phone a second time. And I think that's where a little bit of the damage comes in terms of the brand and the financial damage that you alluded to before. Although I would point out that the Note itself is probably around 5% of sales in any given quarter, 10% of their mobile phone sales. And so I think they can kind of contain the damage, particularly, as we roll into next year. My suspicion is they'll move up the introduction of the next Note.
John Lilly, you invest in countless companies that are built on the back of the smartphone market and Android especially. How big a problem do you think this is?
I think it's hard to say. I mean, you saw the revenue breakdown for Samsung. So smartphones is a huge part of the revenue. My sense is that they have a near-term problem, which is just getting through the next few weeks and months to the next Note. And I expect they'll introduce a new Note. But I don't really have any information about that. I think the midterm problem is one of trust. Like, will people think about, like, the memes are brutal about all the Samsung's catching on fire, that kind of stuff. The longer-term problem is a more fundamental one, which is that they've sort of got a hardware soul living in a software world now.
Interesting. So they are working on the Note 8, as far as we know, which is supposed to be coming out in 6 months. And Wayne, I'm curious, how do they solve this hardware problem if indeed the problem is related to, as you said, everything being so tightly packed in there, these batteries being denser than ever? Is that a hardware problem that can actually be solved, or have they reached the limit?
Well, I don't think we've reached the limit. It's really about solving these issues. It's a quality issue, it's a manufacturing issue. So what really happened here is the hyper-competitive market has forced Samsung to iterate at a much faster rate. So things like this get lost through the cracks, and I think what they need to do now is really go back and work out all those quality issues, manufacturing issues. This is achievable. You can have a very long-lasting phone with a large screen. It's just that being the first to push in this space and being the first to do this type of design, you take the risk of spectacular failures like this.
John Butler, let's talk a little bit about China specifically, because Note 7s in China were initially left out of the recall. Now this production halt applies to all Note 7s around the world. This is a hyper-competitive market, the biggest smartphone market in the world. What does it mean for Samsung in China specifically?
Well, China's tough because if you look globally, you know, people would look at it and say, well, Apple and now Google are probably the competitors to watch. But once you're in China, you have to look out for Huawei. Huawei makes very good high-end phones, and I think and they're Android-based. So, you know, as people look at Samsung and say, I need an alternative, I don't want to go down market within the brand itself, where do I go? If you're in China, the answer is you may go to Huawei. If you did want to step down and move outside the Samsung family, you might consider Oppo or Vivo. These are all great brands. Xiaomi is another one. China is a particularly crowded market with, I think, particularly good competitors.
Wayne, do you think that redesigning the circuitry could fix the problem? Could they do something that takes the pressure off the battery?
Sure. As with any consumer electronic and any semiconductor product, you know, the industry follows the Moore's law of smaller and smaller circuitry. So the next generation of chips coming out of Samsung will require less power. The next generation of displays is going to be less power hungry. So hopefully those types of design evolutions will compensate for the need to pack in that high density of a battery. But again, I think it's really about this fast pace of innovation. Apple only releases one new product a year. Samsung's releasing multiple products through the course of the year. So this pace of just trying to get new designs out, trying to differentiate, be in the forefront, those are the risks that happens when you're a market leader.
John Lilly, we got some questions for you on Twitter, and one of them was, what kind of phone do you use?
I carry on an iPhone 7 Plus right now. I like the bigger battery, and despite what our guest just said, it's hard for me to believe that smaller screens, anything's going to reduce our desire for more and more energy.
Do you give Samsung credit for trying, or do you think they bit off more than they can chew?
I don't think you get a ton of credit for trying in the smartphone market. I think it's a brutal market. I think if people start returning their phones and lose trust, I think it's pretty tough. Again, Samsung's an amazing company. They're huge. They're going to have to come up with something new. But Google's shipping one that's just as big. Apple's shipping one. They're going to have to compete.
We're going to talk about that right now. John Lilly of Greylock, you are sticking with me. My guest host for the hour, Wayne Lam of IHS, John Butler of Bloomberg Intelligence. Thank you both for weighing in. As I mentioned, in the spirit of Bloomberg Technology, streaming our first show on Twitter today, we looked to where else but Twitter and asked, would you still buy a Samsung smartphone? And the results are in. Over 500 people took the poll. 72% said no. The timing of these numbers couldn't be better for Apple with the release of the iPhone 7, or Google, which just announced plans to launch its own high-end phone. So who stands to benefit the most from the Galaxy Note 7 debacle? Joining us now to discuss, Bloomberg Technology's Mark Gurman. In the newsroom, John Lilly of Greylock still with me. So Mark, Early numbers show that, at least our numbers show that people could really be affected by this. Customers could be affected by this. What does it mean for Apple? What does it mean for Google?
Well, this is not happening in March, April, or June. This is happening now, right ahead of the holiday season, the most important quarter for every technology product maker, every consumer tech product maker, especially Apple, Google, and Samsung. So this is huge news for Google because their phone is coming out in 2 weeks from now. This is huge news for Apple because their phones have been out for a few weeks now. Apple's ramping up production and getting ready to go into this massive holiday season. For Samsung, this is awful. They're going to miss the boat on one of the most important quarters yet.
I was speaking with Hugo Barra, Global Vice President for Xiaomi, a competitor to Samsung, and he didn't seem to think it would be, a hugely long-term problem. Take a listen to what he had to say.
They'll recover. They'll get their brand back. It's really perhaps a small mistake that will cost them dearly, but I don't think that this is a long-term problem.
Look, Mark, there have been incidents of lithium-ion batteries overheating in the past. Samsung and Dell had it with laptops. Boeing had it in their planes. They recovered. Of course, we're still talking about Samsung today. But do you agree that this problem will also blow over?
Well, Emily, as every year goes by, the spread of the news through different social media platforms like Facebook and Twitter, and our own station now being streamed through Twitter, the news spreads at a faster pace. More people read about it. Whenever this Boeing issue happened a few years ago, as many people did not hear about that, certainly. And Samsung is a brand that is continuing to grow quarter after quarter, going against the titan of the technology world, Apple and Google. So this is really a historical move, and I think it's pretty much one of the worst consumer tech battery-related issues to date. Will it blow over? Sure. As one of the earlier guests said, the Note 7 only represents a small percentage of the company's overall sales. But from a marketing perspective, this is pretty damaging.
Right. Samsung's name is on all of its product. I'm curious, John, do you think they should ditch the Note 8 and rebrand, or give it another go?
That's an interesting question. I don't think so. I bet they won't call it the Note 8 in China after this.
Why China specifically?
Or sorry, I bet they will call it the Note 8 in China because of the numerology stuff. I wouldn't. I think people like the Note. I think they like the big screen. I think maybe they'll call it the big Galaxy. I don't really know. We'll see.
Mark, what are suppliers telling you? Any new information about, exactly why this has happened and why it's taken Samsung so long to figure out the root cause?
Samsung hasn't said what the exact root cause has been. They haven't really gone into detail on the original model, and they haven't gone into detail on what's causing the replacement issues. It's just been a repetitive process, and we're still talking about this 2 or 3 weeks later. I remember when we first talked about this when the news first broke last month, and it's just getting worse and worse and worse every day for Samsung. This news where they're completely halting production is, it's very surprising to come just hours after they said they're asking carriers to halt sales. So this whole thing has moved very quickly, but I think we're nearing the end of it.
All right. Well, as far as we know, they're still working on the Note 8, which 8 is, as you mentioned, John, a lucky number in China. Maybe 8th time's a charm. Bloomberg Technology's Mark Gurman in the newsroom. Thanks so much, Mark. And John, you're sticking with me. A story we are watching, a Supreme Court showdown between Apple and Samsung has begun. At stake, whether Apple should be allowed to keep all of a $399 million patent award it won after accusing Samsung of copying the design of the iPhone. That amount is equal to Samsung's entire profit from 11 phones found to have infringed on Apple patents. So far, we know that some justices suggested returning the case to a lower court for more hearings, while others said they weren't sure how a jury or judge should decide how much money Apple can collect. Still to come, Square may be trying to shed its food delivery business, but a steep price tag is getting in the way. Details next. This is Bloomberg. A story we are watching. Square may be trying to shed its food delivery business, but so far without success. People familiar with the matter say Square discussed selling the unit, Caviar, with Uber, Yelp, Grubhub, and others, and that a $100 million price tag was shot down. Bloomberg Technology reporter Eric Newcomer wrote this story. He's with us now here in the studio, as well as my guest host for the hour, John Lilly of Greylock. So, Eric, what do we know? What happened?
Yeah, beginning of last year, early this year, just after Square had gone public, got a little bit of inbound interest, and then there was discussion over selling Caviar, the food delivery startup that had bought a couple years before that. Nothing came together. 100 million, a little more maybe, about 100 million was the price that was discussed. And neither side, but both sides sort of walked away from that.
It's interesting. I had Keith Raboy on the show, who was former COO of Square, and he's very forthcoming. He does not hesitate to share his opinions. And when I asked him, but why did Square buy Caviar? He said, I'm not going to answer that question.
Yeah.
Did you ever understand, John, why they bought this business?
I didn't. It feels a little bit different than their core business around lending and credit for small businesses. So it never made a ton of sense to me. But, I'm sure it made sense to somebody.
So, Eric, as far as you know, they're still trying to sell it? Is it likely they keep it, they take a loss, what?
The actual talks are sort of behind them. I imagine there's always a price. I mean, I can't speak for them, but that would be my sense. But the actual talks seem to be behind them, and nothing came together.
Now, the food delivery space is hot, but it's challenging. We saw DoorDash did a down round. Postmates has had trouble raising its next round. You guys are in Sprig, which is another food delivery company, and I'm curious, what do you think? First of all, there's a lot of companies trying to do this, but is this really a good business to be in?
Well, I think it's important to note that not all these companies have the same model. So Sprig makes their own food and sends it out. It's very different than, say, Caviar or Postmates, who are delivering restaurants food. So I think that you have to really understand the model. You have to really figure out how to get efficiencies. In Sprig's case, they vertically integrate.
But do the economics work? Can the economics work in any of these businesses?
Well, we think so. We think so. Otherwise, we wouldn't have invested in Sprig, obviously. And so we feel fairly comfortable about that. And they do thousands of meals in San Francisco, and we feel pretty good about Sprig. I think every business is a little bit different, though, and the details matter and the model matters.
So what are some of these companies perhaps doing wrong? Or do you think we'll see the vast majority not survive and a couple rise to the top? I mean,
yeah, I don't know. I think it's hard to tell. I think it kind of depends on how consumer demand kind of moves over time. I'm not a food delivery expert. I'm a food consumption expert, but I'm not much of a delivery expert.
I like consuming food as well, Eric. Grubhub shares are actually up 60%, which you point out in your story. Uber is going hard after this market.
Uber's going globally in Uber Eats. I mean, Uber has the advantage of having the network of drivers already, and drivers who are taking people during commute hours, and then maybe in the interim when people are eating, a little less busy. So I think they think, we can smooth out that crazy demand for drivers by serving food in the meantime. Whereas everybody else, all our competitors, have to build up their own fleets of drivers. They're competing with us to pay for them. And so we just have a huge advantage. And they're all over the world. I've seen them. There are employees starting to spin Uber Eats up all over the world for Uber, and so I think that's the looming threat. Though Grubhub, like you said, is doing really well. The stock price is way up.
I've had some positive experiences with Uber Eats. I've had some negative experiences with Uber Eats. John, do you think that this is a business that Uber can crack, along with everything else they've got on their plate? I
don't know. I've had the same experiences you have. Some of them are amazing. You get burritos and 2 minutes. Some of them not so good when they don't convert. So I think the quality of the experience, product quality, always matters. Can they get the right product in the right time for the right price? And it's a hard mix. We'll see.
All right. Well, Eric Newcomer, thank you so much for bringing us that update. We'll take a close look at Caviar. Keep our eye on it. John Lilly of Greylock, you're sticking with me. Later on this hour, BMW taking on Tesla. CEO Harold Kruger shares his plans for a future electric fleet. This is Bloomberg. Amazon may be pushing deeper into brick and mortar. The Wall Street Journal reports that the e-commerce giant plans to push deeper into the grocery business with its own convenience stores and curbside pickup locations. It cites people familiar with the plan, saying Amazon will sell produce, milk, and meat at these stores and potentially order other items with a longer shelf life, like peanut butter and cereal, from the store for same-day delivery. The plan is reportedly known internally as Project Como, and is, for now, reserved exclusively for customers of its Fresh subscription service. One stock we continue to watch is Twitter. Shares rose in Tuesday trading on reports that a sale of the company may not be off the table after all. Evercore ISI analyst Ken Sena also upgraded the stock to hold from sell, citing a third-quarter forecast that might be on the conservative side. On the other hand, Sena noted that recent M&A speculation is a distraction that could further hinder Twitter's performance. Also moving, Seagate shares of the hard disk drive maker slid more than 7% Tuesday after pre-announcing first-quarter earnings. The company said it's expecting higher operating expenses due to a refresh of some of its products. Despite this, analysts from J.P. Morgan and Needham both upgraded the stock to buy on improving demand. Coming up, the road ahead for Samsung. How much damage could this recall do to the smartphones brand in China? We'll break it down. And if you like Bloomberg News, check us out on the radio. You can listen on the Bloomberg Radio app, Bloomberg.com, and in the U.S. on SiriusXM. And now streaming on Twitter, this is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of first word news. Donald Trump says House Speaker Paul Ryan is complicating his campaign. Trump tweeted, quote, "It's hard to do well with zero support from the speaker." Ryan responded by urging Trump to focus on defeating Democrats rather than fighting Republicans. An Afghan official says a lone gunman killed 14 people, including 13 civilians, in an attack on a Shiite shrine in Kabul. Another 26 people were wounded. The suspect was shot and killed by police. German Chancellor Angela Merkel met in Ethiopia today with the African nation's new prime minister. Ethiopia is under a newly declared state of emergency. It's one of the world's largest hosts of refugees, with hundreds of thousands having fled from nearby Somalia and South Sudan. Russian President Vladimir Putin today postponed a visit to France after President Francois Hollande let him know that he, Hollande, wouldn't take part in the opening of a new Russian Orthodox church and was only interested in discussing the Syrian crisis. Over the weekend, Russia blocked a UN Security Council resolution proposed by France and Spain on ending the hostilities in Syria. I'm Mark Crumpton. This is Bloomberg. It's just after 6:30 p.m. Tuesday here in New York, 9:30 Wednesday morning in Sydney. My colleague Paul Allen has a look at the markets. Paul, good morning.
Good morning, Mark. Well, we'll start off as always in New Zealand, which has been trading for 90 minutes now on Wednesday and is already off 1/3 of 1%. That's following a very weak lead from Wall Street. The New Zealand and Australian dollars are also weaker following a strengthening greenback. When the ASX begins trading in about 30 minutes' time, we're expecting to see declines there as well of 0.8%. Also, no surprise, we're expecting declines on the Nikkei as well. Futures in both Chicago and Osaka are currently pointing down. In Japan, be worth keeping an eye out for Lawson today, another convenience store operator out with first half earnings. That's after Family Mart on Tuesday boosted full year sales guidance. Lawson operating profit is expected to decline 5% to about $400 million US. This is amid ongoing store renovations. If you take a look at the share price, hasn't been a great year for Lawson, off about 10% on year. Fair amount of economic data out today as well. South Korea will release unemployment figures for August. Those are expected to hold steady at 3.8%. Japan machine orders for August also due out. They're expected to contract by 4.7%. And within the next hour, we'll get consumer confidence figures here in Australia for the month of September. I'm Paul Allen in Sydney. More from Bloomberg Technology next.
Technology, I'm Emily Chang. The story we continue to watch, Samsung is ending production of its Galaxy Note 7 smartphones. The announcement follows news that Samsung was recalling all Note 7 devices, including the supposedly safe replacement units. One country initially left out of the global recall, China. The market is a huge hit for Samsung. For more, I want to bring in our editor-at-large, Corey Johnson, as well as our Bloomberg Asia Tech managing editor, Peter Elstrom, joining us from Tokyo. And with me still, Greylock venture capitalist John Lilly. Peter, I want to start with you because it's been a unique situation in China. They initially didn't recall the phone in China. Now the recall applies to, or the production applies to all Note 7s around the world. What is unique about the way that this has unfolded in China and how Chinese consumers may respond to this?
Well, it's perhaps important to begin with the fact that China's the biggest smartphone market in the world, and Samsung historically has done reasonably well there. They faced rising competition recently. With this particular phone, though, the Note 7, they shipped a small amount right at the beginning of production. This was back in August, September, and so they didn't do a full-blown recall. They only took back some of the phones that they said were from the early batch. They said the latest phones were safe because they were from a different manufacturer. Now, as they've discovered there's another round of problems with these phones, they've decided to do the full-blown recall. But that initial decision not to go with the full-blown recall in China did cause them some goodwill in the country. We talked to consumers there and also to regulators there. They were bothered by being left out of the recall, and that's fostered some ill will. And they have lots of choices among the domestic manufacturers in particular in China.
So potential rise of distrust around the brand. Corey, obviously Samsung is a huge business. You've talked to us about that. Why are smartphones so important to the business, though they are a fraction of the whole?
So most of Samsung's profits in terms of how the business is run are derived from smartphones. They're in lots of different industries. They've got lots of diversification on the top line. When it comes to the bottom line, not only is most of the profits from smartphones, but as those phones ramp, there's tremendous sort of addition to that. So when phones are going well, profits are going fantastically for Samsung. It's also interesting when it comes to China that Samsung has had de minimis market share in China, but the Note was really the product that really helped them, the phablet that really helped them in China because of the way the Chinese characters work, because they show so much better and read so much better in a bigger phone. The iPhone 7 Plus and the Samsung Note were very, very important in terms of product offerings in that country. To screw up that country is a really big screw up for Samsung.
And talk about China in particular. How big is the phone business in China for Samsung?
So again, it's de minimis in terms of market share, but the opportunity is massive there. And they really thought that the Note 7 was going to be the device that catapulted them into a much more prominent position in that country. Now, it's also worth noting that they're working at the very, very high end, where there's a ton of phones sold in China, smartphones of all different stripes. But the serious profits are left only for those most expensive phones. So for them to tick off those customers and even to backtrack on a recall with those customers could seriously damage their long-term efforts to capture the vast majority of the profits in the phone business in China, as opposed to the majority of the sales in China, where you've got companies like Lenovo, Xiaomi, Huawei, all slugging it out for really crummy profits.
John, if you're behind the scenes at Samsung right now, what is first order of business? How do you even begin to tackle this?
Well, I think you got to make sure you take care of your customers. I think no questions asked. Always give them what phone they want. More or less, you're gonna have to eat short-term profits in a pretty serious way. So whatever phone people want, and then I think you're gonna have to figure out. You have to be, I think, somewhat more transparent than they're probably used to being about what the root cause is here. Is the cause in the battery? Is the cause in the firmware? Where up and down the stack is the problem? Secrecy
is a very much part of Apple culture, Samsung as well. And I'm curious, this is a huge test, Peter, for Jay Lee, heir apparent at Samsung, who is in position to take over from his father, who's been suffering from some very serious health issues. What does this mean for Jay Lee?
Yeah, J.Y. Lee has been stepping more into a leadership role at the company. I mean, as mentioned earlier, Samsung's brand has been on the rise. We mentioned in a story that it's ranked number 7 in the world. It's ahead of Amazon, ahead of Mercedes-Benz. So they have a very, very valuable brand that they need to protect here. They do need to be more transparent as they investigate these issues. They probably do need to open up about what went wrong and then reassure customers that the next generations of phones that come from the company are going to be safe to use. They're going to be good quality phones. Historically, of course, they've had a very, very strong record in this area, and that's what makes it particularly difficult. This is a company that doesn't outsource its manufacturing. They make many of the components internally, and they pride themselves on their manufacturing expertise.
Corey, difficult to speculate, I know, but a year from now, how does Samsung's balance sheet look as a result of this?
Well, I mean, their balance sheet depends on how much money they spend on this. I mean, I think ultimately the cost...
There's an estimate it could cost $1 billion.
Right, which is not a big dent to their balance sheet. But I think that long-term, there's two things that are interesting, right? There's the damage to the brand. We've been talking about that for days, and what does it mean? What customers are going to come back? Are they hurting themselves in China by not doing a recall? Are they hurting themselves in the U.S. for their safety reputation? But the bigger question for me is, will other competitors come into the market right now on the high end with lower margins and say, hey, we're Huawei, we're willing to have a 5% margin on these smartphones with a lot of features. And then the customers throughout the world say, you know what? This Huawei phone's just about as good as the new Samsung 9 or whatever they call it, and it's at much lower price. And so there may be a permanent readjustment of the operating margins for even the gross margins for smartphones, and that could really change the phone industry because of the opening left by Samsung leaving the market right now.
And again, we did poll about 500 people on Twitter who said they would no longer buy a Samsung phone. 72% of those people said they wouldn't buy it. Corey Johnson, our editor-at-large, Peter Elstrom, our Asia Tech editor, John Lilly, you're sticking with me. We've got some questions from Twitter for you. Coming up, Greylock Partners' new $1 billion fund, a sure sign that fundraising is going well, but what about the rate of investments? We'll chat with our guest host for the hour, John Lilly. This is Bloomberg. On today's funding board, Greylock Partners' $1 billion fund, the latest in several Silicon Valley VCs raising 10-figure funds in what is shaping up to be the biggest fundraising year in venture since the dot-com bubble. But at the same time, investments in startups are slowing. Back with me, John Lilly of Greylock Partners. Lots of questions on Twitter about what kinds of investments you'll be making, any change in strategy here. How will this be allocated?
It'll be about the same as sort of steady as she goes. We're on our 15th fund now. We've been around for 50 years. We tend to make, it's a $1 billion fund, just like the last one they raised in 2013. We have a lot of the same people around, plus some new partners. We tend to invest in network effects, consumer businesses like LinkedIn and Facebook and Instagram, things like that. We tend to invest in enterprise software. We'll add some things to that mix, but we have a formula we feel like is pretty comfortable.
So a couple questions from Twitter here. One, you guys have obviously had some big exits, as you just discussed. Can you talk about managing expectations with LPs?
Well, I think you always say, look, we're gratified to be in some of the most important companies around. Dropbox and some of the up-and-coming companies like Nextdoor and Medium and Musical.ly and Okta that we talk about sometimes. We're gratified and we work hard, but I think we always have to act like it's a new fund. Like we have to do it from the beginning, from scratch, and try to prove it, prove we're valuable to entrepreneurs every single day. So. I don't think we do a lot of managing expectations for LPs. Our LPs have been with us for a long time, and they're some of the very best LPs in the world. So we don't try to manage that at all. We just try to be honest and open with them.
And how difficult was this particular fundraise for you? I mean, at this point, is it easy? You don't have to prove much.
It wasn't a difficult fundraise. We're fairly predictable. We have our twice annual meetings in January and July. We discussed the fundraise in July. We discussed that we were going to do it about the same as last time, and we closed it the first week of October. So it wasn't a lot of drama in it, but I think we're grateful to have the LPs that we have.
Now, as I mentioned, VCs have been raising a lot of money, but according to PitchBook and the National Venture Capital Association, there's a 29% drop in dollars invested in startups and in the number of deals that are actually being done. And a number of investors that I've talked to have said, I've looked at dozens, hundreds of companies, and I haven't seen one good one in the last 6 or 12 months.
Right.
Have you had that problem?
Well, I think we try to be as consistent a pace as we can. So we tend to do about 12 to 18 companies a year, plus some seed investing and plus occasional growth investing for companies that are getting bigger. I think as far as dollars invested, I think just technology is getting more efficient. Like it's easier to start, it's easier to figure out what product market fit is, it's easier to get the first product. As far as companies invested in, my guess is that probably excludes the huge amount of seed funding. And so we're seeing lots and lots and lots of seed funding. We don't see any slowdown at all at seed funding, really. But my guess is that this is really counting institutional rounds, A's, B's, and C's. And so I think a lot of it is just the ecosystem recalibrating to seed rounds.
So what's your advice to portfolio companies right now, companies that are trying to raise but may see all this money out there, but they're not getting any of it?
That's interesting. So we've tried pretty hard to keep our companies capitalized well. So I think we looked around last year. We saw some of the turmoil and some of the fact that the markets were pretty fully valued, and so I think we got ahead of a lot of that. But mostly what we tell our companies is like build products people want, build products consumers want, build products enterprises want, and build sustainable, durable value. Try to do it a little bit efficiently. I think that growth at all costs is people won't tolerate now like they used to. But build things that people want and do it efficiently.
What do you think is going to happen with valuations? Are they still going up, or do you see them plateauing?
Yeah, we've seen. I think probably the peak for valuations came about the sort of Q3, Q4 last year, and so we feel like now we're in a kind of a new normal zone where it's come down a little bit. I think for the very best companies that look like real breakouts, there's not a lot of them anymore. Like, Snapchat is doing very, very well. Some companies behind them like Medium, like in our portfolio, Medium and Discord and Musical.ly on the consumer side, there aren't as many consumer breakouts as there've been. And so I think people are willing to pay for when they break out, and that's where a lot of the dollars go.
We've reported that Snapchat is looking to file paperwork to go public as early as March of next year. What do you think is going to happen with the IPO market, the tech IPO market in particular? Yeah,
I don't know. We don't think too much about the tech IPO market just because it's hard to predict and it's very sensitive to macro. This has been a slow year. The 5 or 6 companies that have gone out, including Aptio in our portfolio and Nutanix and some others, they've all done pretty well, and Twilio has been a star. That's in my anti-portfolio. I think I passed on Twilio 5 times, and Jeff has just been such an amazing chief executive. But I think that what's not unpredictable is the M&A market is incredible. It's the best M&A market since 2000. And probably the second best M&A market ever, and that's for good reasons. The top 25 companies, tech companies, have $1 trillion on their balance sheet, and they want to spend it.
So what do you make of all of the M&A speculation around Twitter and Salesforce potentially being the last potential buyer at the table right now?
Yeah, well, I don't have any inside information, but I tweet a lot, and so I hope they're okay. Like, I don't really know. I spend a lot of time on Twitter for work, and it's where my friends hang out, and so.
Does Salesforce as a buyer make sense?
Well, it doesn't make a ton of sense to me. I think what I've read in the press is Mark Benioff calls it a big data asset, and so trying to help him and all the people, all his customers, make sense of what's happening in the world. And to make, he's a smart guy, so I have to take him at face value.
You did invest in Quip, which Salesforce recently bought. What's sort of the backstory behind that? Salesforce buying Quip, and obviously Salesforce is on the hunt.
Yeah. Well, I mean, Quip's a special company. Brett Taylor and Kevin Gibbs set out 4 years ago, maybe 3 years ago, to attack Office. And what they realized is that Microsoft didn't have a distribution advantage like they had had for the last 30 years. And there was suddenly a new opening. So they went off and built word processors that were acted a little bit like Facebook and that kind of stuff. And they built a beautiful product. I think what they looked at is they said, well, who's got the channel and who's got distribution power to really take advantage of that? And you look at something like Salesforce, who does.
Now, we've been talking about Samsung for a large portion of the show, and I know you have some thoughts on how Google may use this to their advantage coming out with their new phones. First of all, what do you think of the new phones, and what do you think Google can get out of this?
Yeah, well, so number one, the phones look like phones. Like they have these beautiful hero shots, and they look like phones to me. They look awesome, but they look like phones. But the magic is in the software and up the stack. And so when you listen to Sundar talk, Sundar said this maybe 2 years ago, which is like, it's not a mobile-first world, it's an AI-first world. And you can see what Google is trying to do is say, look, Google Smarts and Google Intelligence and AI, it's going to be in everything. It's going to be in the things that, whatever the Google Home thing, that's whatever, I'm not sure.
Right, their version of Amazon Echo.
I'm sure it'll be in the car, it'll be in phones, it'll be everywhere. And I think that that thinking is what led Samsung to buy a company called Viv last week, which is an AI stack. We have an investment company called Oslo, which is building a personal assistant AI stack as well. These are coming. I think Viv and Oslo are both a generation past what you can do in Google Assistant now. So you can do things more like asking, where's a good place to watch the game, which doesn't make a ton of sense if you're to ask Google, but you can ask Oslo, and Oslo will tell you. It knows about TVs, and it knows about sports bars. And
yeah. All right, John Lilly, partner at Greylock, talking about your new $1 billion fundraise. Thank you so much for stopping by and for keeping me company on the set today. It's been great to have you.
Day one of Twitter.
Day one of our streaming on Twitter. Hope it counts.
Yep, thank you.
Tomorrow on Bloomberg, do not miss fashion designer Tory Burch, 7:45 a.m. New York time. She'll be joining Daybreak Americas to discuss the 2016 presidential election. And up next, BMW taking on Tesla. CEO Harold Kruger shares his plans for a future electric fleet in an exclusive conversation coming up. This is Bloomberg. A story we are watching. New data from market research IDC shows that PC shipments continue to decline, but less so than earlier this year. Computer makers shipped 68 million machines globally in the third quarter. That's down from nearly 71 million at this time last year. Once again, IDC says the U.S. proved to be a bright spot for the industry. Unit sales rose nearly 2% for a second straight quarterly gain. Meantime, rival research firm Gartner had a more pessimistic snapshot, showing a 5.7% slide globally from a year earlier and little change in the United States. The CEO of BMW says he's looking to electrify the brand. Last month, the German automaker unveiled plans for the first battery-powered model of its urban mini brand and the BMW X3 sport utility vehicle. BMW CEO Harald Krüger says newer models will have a longer range of charge. He sat down with us for an exclusive interview. Bloomberg's Matt Miller, take a listen.
That is a challenging goal, and we will see what will be the outcome. But we know that there are three drivers, really, of the development and growth for electrified vehicles, which is definitely range, that the customer doesn't have a pain point in terms of then the infrastructure, and that's something where we need to be faster in the future to invest more into the infrastructure. A city like Los Angeles, where we're here today, they are nearly perfect in many areas, but many parts of Europe or other countries across the globe, it's difficult to have the infrastructure. And the third pillar is that we have some attractive pricing and financial support for the electric vehicles. But I call it also, it's a marathon. It's not a sprint. And with a marathon, you know that this is being decided if you win or lose later on, somewhere at kilometer 30, for example. So you need some time for this movement and development. But it's nothing which will go away. And it's clearly one important strategic pillar of the BMW Group to invest into electrification.
You, I'm sure, as a German, as a BMW executive, you're a planner. What kind of numbers are you thinking about? You know, you're going to develop those 2 electric cars, you know, very soon, but over the next 10 years, will you have 10 or 15 new models? Do you want to make 20% of your sales electric?
I mean, that's an open point, how many models we will have in the future. But if you think we are now in phase 2, in phase 1 we started with the i brand, with i3 and i8. Now we will electrify the group portfolio, yeah? The BMW brand, the Mini brand, and we also invest heavily into electrified motorcycles, because there's also, with urban concepts, a positive future. And it will be difficult to guess how many products we will offer and how much percentage we will see in the future, but it might happen that we see a range of maybe 15%, 20%, 25% in the next 10 years in terms of percentage of electrified vehicles.
That was BMW CEO Harald Krüger with Bloomberg's Matt Miller. And in this edition of Out of This World, President Obama is reinvigorating his call for the U.S. to send humans to Mars by the 2030s and return them safely to Earth. In an op-ed on CNN's website, Obama wrote that the long-term goal will be to one day remain on the red planet for an extended amount of time. The president also called attention to cooperation between the government and private space companies like SpaceX, without naming Elon Musk's company by name. Obama first set the goal of a 2030 timeline to set foot on Mars in 2010, but the initiative attracted little attention. He'll discuss the plan further when he meets with scientists, engineers, and academics at an innovation summit on Thursday in Pittsburgh. And that does it for this edition of Bloomberg Technology. Tomorrow, we are speaking to Snapchat's very first institutional investor, Lightspeed Managing Director Jeremy Liu. Tweet us your questions. We're at Bloomberg Tech TV. And a reminder that we are now streaming every episode live on Twitter, 3 p.m. Pacific, 6 p.m. Eastern. That's all for now from San Francisco. Thanks for watching. This is Bloomberg.
studios in New York City, this is Charlie Rose.
We begin this evening with an analysis of the second presidential debate. Hillary Clinton and Donald Trump exchanged character attacks and accusations for 90 minutes at Washington University in St. Louis. Moderators Anderson Cooper and Martha Radich fielded questions from voters in a town hall format. Trump entered the debate facing controversy and severe criticism after a 2005 video surfaced on Friday in which he makes lewd comments about women. In the debate, Trump expressed regret, saying it was locker room talk, but many saw his words as bragging about sexual assault. The revelation rattled the Republican Party, leading dozens of lawmakers to revoke their support of Trump, some calling on him to withdraw from the race. House Speaker Paul Ryan reportedly said he would no longer campaign or defend Trump during a phone conversation with GOP leadership this morning. According to a new NBC News Wall Street Journal poll, Clinton leads Trump by 14 points. A CNN ORC poll found that 57% of debate watchers thought Clinton won the debate. 34% said Trump won. Joining me now from St. Louis is Bob Costa of the Washington Post, here in New York, Jonathan Karl of ABC News, and Frank Luntz, founder and chairman of Luntz Global. That's a consulting and polling firm. I'm pleased to have all of them on this program. Jonathan, where do you think, after the release of the video, after the debate, after what Paul Ryan said this morning, where are we with respect to Donald Trump and his campaign, and what might we expect the rest of this week?
Well, we're at this extraordinary point where the Speaker of the House, where the most powerful Republican in the land, will not defend his party's nominee, will not campaign for him. He's technically said he hasn't unendorsed him. I don't know what an unendorsement looks like, if that's not an unendorsement. Trump had a debate performance that exceeded expectations, very low expectations that those in his party had. So
compared to the first debate.